Good morning, everyone. So I've been watching price this morning, and there's quite a bit of action. We had a lot of volatility. So to begin with, we had consolidation throughout this morning, with most of the Asia session and London session. And I was up at around 5 a.m. watching the price action, and I liked this gap that was created on the 15-minute chart after taking these relative equal highs right here. I like that because price had lows to take after it took out these highs, and it was closing below, making sharp moves lower. So I like that. And if you want, there was an order block formed. If you want on a lower time frame, you kind of see the same sort of price action from yesterday, where we've made a huge range lower. We don't really have willingness to go back higher, and we have an inverse fair value gap here work for us as we get beneath it, leaving a breakaway gap, the gap that should not fill. And so that was the idea. That would have worked for a nice 20 points. Very easy down to these lows, and then price runs down, hits the low of the day, and total soups reverses to go higher, and we start to trend higher. We end up using this whole order block here that supports price. It's a bullish order block, and we start to run higher. There was some news this morning, which was pretty interesting. We've had, let me go back to the hourly chart. We've had a run up into this order block here. Now there's nothing that tells me that we can't continue going lower. Like 8:30 opened up, made a run higher with off the news, and then 9:30 may continue to expand lower, like reversing it and run back these lows, because we had still a lot of relative equal lows. And what happens if you turn off the wicks here? Right, these are basically equal, and I think we need to clean this up. I don't like it when I see wicks, and this is the reason why. I mean, this doesn't look like it was cleaned up at all. Alright, maybe this does on the 5-minute, but on the hourly chart and the 4-hour chart, well, not really the 4 hour, we can't really look at that, but on the hourly chart this looks really clean, and I want to close beneath here to sweep that liquidity, because there's some people that are probably just trading line charts and trends like this, and they see this as support. And so, is it support? No, it's not really support. Price is going to come back beneath here to target these relative equal lows, precisely the bodies. But that's where the liquidity is, that's where the orders are resting, because that's where people think price is going to see a reaction, so it's going to gravitate towards that level. So I can look for trades to target the orders down here. But with how we ran up so quickly at 8:30, I mean, yesterday when we ran up at 8:30, we ran up above some relative equal, like short-term highs. We don't have any short-term highs in proximity to this high at 8:45. So that's why, like 9:30, it can open up and make another run higher and make a breaker. That's what I'd wanted to see above the midnight open to continue expanding lower. If I don't see that, well, then it will just continue going lower, and that's fine. It'll go without me. On the regular trading hours gap, right, we filled this gap I was looking for on Friday. We have this gap up here, but we don't have to come back up there. And we failed to show willingness to fill this gap here left on Wednesday's opening. So this could also signify that we're just bearish and we're going to continue going lower. Hold on, I think I might have solved it, but the mic issues is probably, I think my mic was acting up, so I think now it's better. If my mic was acting up, I'm just going to recap very quickly what I said. Basically, overnight we consolidated, moved sideways. This caused a lot of volatility in the morning. We had a turtle soup lower with this nice and big wick there, and we trended higher, and 8:30 opened up violently, trading higher. And I want to see a reversal, but not yet, because we don't have any short-term highs which you traded above. Like, I want to see this X here like we did at 4:15 a.m. So we can see another run above this short-term high. That's what I would be watching before reversing and before looking for a trade. And we're also above midnight open. But there's nothing that's telling me that price cannot continue going lower. Right? We've had a trend lower, and we've had these up close candles resist price. So as long as these up close candles in premium resist price, we can continue going lower till we get to a higher level of buy side liquidity. We could be leaving a fair value gap with a market shift and continuing to run down to these breakaway gaps, more discount down here. And like on the daily chart, I want these lows to get hit, but I want them to get hit within the 60-day look back. So that would give us from today about 2 weeks. If you go out to July 16th, midway July, it give us about 2-3 weeks to time to see those lows get hit. It'd be about 3 weeks actually, because 2 weeks, yeah, because 10 trading days, and yeah. And yeah, I was gonna take a look at the dollar. And we have news at 9:45 too. We had news at 8:30. We have 9:45 news. Alright, look at the dollar. Yeah, the dollar, I wanted this to bounce off of the gap down here, if you remember from yesterday. But we ended up actually just coming right back down to the range. So we're kind of like moving sideways, but we're doing so in a volatile manner. Right, so we could be targeting that low right now. Dollar to me just seems range bound, lower probability. One thing I need to be sure about is not to force no setup, right? Like we are Friday, the last day of the week, and I won yesterday. So, do I need to trade today? No. If there's a really nice setup, I'd like to take it, but I need to make sure not to force a setup, not to take something that I know is low quality or low probability. And if it means no trading today, I'm okay with that. That's one thing I need to remember, that no trading is okay. It's not the end of the world. Not yet, at least. And there's the S&P. The Dow's going up again. That's good. I hate it when the Dow is going down and the Nasdaq is going up, because that's unless the bias is higher, then that would be the case. But that wouldn't be the case. Sorry. Usually the Dow recently has been going lower while the Nasdaq's going higher. But now we're seeing these opens run higher. Probably because Dow is at such a discount. We're gonna see the Nasdaq and the S&P 500 sort of catch up a little bit. Bond market looks like it's gonna go higher. I don't know, but just by looking at it a couple quick minutes, it looks like it's gonna go higher. Anyways, I'm gonna, on the 15-minute chart, remember what I need to see to get into a trade. I need to see a run on short-term stops is on the 5-minute. But if we form a candle that I think from low to high ran short-term stops on the 5-minute, I see it on the 15-minute, I know it's going to be an order block, and I'm going to use that candle as an order block. Otherwise, I'm not going to be dropping down to the lower time frame. If there's no order block or no confirmation, it might close beneath this gap, or it might come back into this gap here, and I'd rather have a high run out before I go down to the lower time frame and look for my entry mechanism. we're getting a little bit of move up here now. I like this order block here, a 5-minute chart, and we've dipped into this kind of gap and bounced it. But we're above the midnight open right now, so I have no need of taking any longs up here. And then 1-minute chart, there are some nice gaps. I mean, but again, I'm looking for that short-term high or low to be hit before going in looking for trades. There's nothing. Everything's balanced, so the reason it would go back up here is, I guess, a very, very tiny gap, like a 1 tick. But the reason it'd come back up here is likely just to come back to the high, because there's nothing really stopping price from this high down to this low. There's no PD arrays really, so if it is to make its way up, it'd have a nice and easy run up to that high. This here may be able to be used as a fair value gap to inverse it. If we close down here and we get above it, maybe this could be an inverse. I'd wait for a better one. I'd wait for this one to inverse, because on the 5-minute chart, we're still bouncing off of, I don't know why it's still bouncing off of this inverse. So basically right now price is just to sit and wait on the 15-minute chart. I like the reaction we're getting from this low being hit. We came down to touch the midnight open, and we are displacing quickly from that level after trading down to these short-term lows there. So far we've displaced much beneath that when I open, more of a discount. I don't like this area here. I think it's too clean. So what I'm looking for then is maybe for, we had 9:45 news which came out and sent price lower, but I'm not looking for an immediate reaction. There is a breakaway gap down here which price is trading into, and this inverse fair value gap, so it should be a strong level to support price. If it's not, I'd be expecting continuing lower prices. If it doesn't respect this level, and I would be done. Like, I'd close my charts and just walk away. If, however, on the 15-minute chart, the next candle may want to consolidate, like have a inside candle like this, kind of like this one over here at 13:30 yesterday. If it wants to do that for this next 15-minute candle, I would look for the 5-minute chart to, and the 1-minute chart to show me bullish signals and create market shifts. Alright, so we're about to close the 9 o'clock hour, and on the hourly chart, there's this big order block right now. It's bothering me. Alright, so that big order block is just a bother. I'm less, when I see this, right, like I'm less wanting to see that nice turtle soup, right, which is just basically coming back. Oh my god. Which is just coming back up here at the high and then running lower and then leaving, stopping out the early shorts. We've dropped down so quickly and created this hourly order block that it's possible we run it back up to the order block and then continue going lower from there. We don't even have to come back to the order block. One thing I also was explaining this morning, by the way, is if you take the wicks off, you have equal lows here. So if you're trading on a line chart, you can see those relative equal lows, support price there. Okay, that is seen as support, and there's going to be liquidity there, orders there, and price is going to gravitate to where most of the orders are. And so if most of the orders are down here, it's a level you want to watch. So even though if we go back to the candlestick chart, even if we had those wicks and we ran down here already, cleared out this low overnight, the bodies are too clean, and price can always come back down one more time and close beneath here. Alright, so that was my idea from being bearish down to here. Now there's still this high that could get hit, and we are sort of trending lower all week, and we are Friday, so this could be a total soup here. If we close beneath here, and then we could leave eventually a 50-minute order block. I wouldn't want it to happen in this candle, but maybe within the next two candles, right, by 10:45 we could leave an order block, and then 10:50 macro could turn the other way and retrace back into this range. I'm cutting my nails. If you can hear that. Like right now, I'm not really. There's probably a whole lots of movements going on a lower time frame, but there's nothing from the hourly and 15-minute chart right now that is leading me to want to take something. I mean, I'm not seeing exactly what I want to see to get into a trade, so there's just no trade, right? However, what I am doing is I'm constantly calculating, what if scenarios. What if we get up into the order block on the hourly chart? What can I look for then? What if we get back down to the lows right now beneath midnight open? What would I look for then? Wow, very, very bearish price action. You know, I find like 70% of the time I'm wearing headphones, but I'm not even listening to anything. Just a remark. Right now, price is sort of creating this candle that I'd like to see if we're gonna reverse higher. Right, we're gonna create. Not look. It's looking a little big now, but if the next candle, however we close in this candle, if the next candle can open up and be super bullish, what the heck? If we can close like up here above its opening, right? And I would say it's closing like that. If we can create something like this, then I would be enticed to use this as an order block, and we could see price come back to it and look for buys. But I'm not dropping to the lower time frame, trying to take any fair value gaps, anything like that, until I see that occur. See, this is what I wanted to see on the Dow. Another run up above 830. That's like a little turtle soup. And then leave the order block. use the order block, go lower. So that's kind of what I wanted to see, but on the NASDAQ. And gold, I wish gold was having less of a heart attack. It's been kind of consolidating. How did the PMI news come out? It actually lowered. It forecasted higher. And the dollar down to the 4-hour gap here could provide a little bit of support. It's probably what's fueling the move lower right now, helping to fuel the move lower. We'll keep watching. Big bearish candle. I wouldn't really expect a bullish order block to form off of this. We'll probably just continue to run lower. but we could see a move back into the week's range today. It just might not be anytime soon. So I'm probably gonna sit till 10:30 and just check out how the next up close candle, or sorry, the next candle starts to trade. That'll be all for me.